And right now, short sellers are piling into the market, thinking they've got everything under control. But a top crypto analyst on X just exposed a massive trap that is being set for the bears. The title of our news right here from Times Tabloid states that an analyst says a doubling is on the horizon for XRP. Alright? If you are holding XRP right now, you need to pay close attention to the structural patterns forming on the daily charts. We aren't talking about small, boring percentage gains here. We are talking about a structural setup that historically leads to massive, explosive vertical moves. The shorts think they are winning, but the chart is printing a classic reversal structure that could ignite a historic market event. So let's look at what is happening behind the scenes. So let's start with our very first question. Will the falling wedge structure trigger a 100% price explosion? All right. So we have here the chart. A very prominent analyst on X known as RWA right here just shared a beautiful high conviction chart outlining a classic falling wedge formation. In the trading world, a falling wedge is one of the most reliable bullish reversal patterns out there. It shows that even though the price has been sliding, the selling power is getting choked out. The waves are getting smaller, the energy is coiling up like a spring, and the exit path is almost always to the upside. According to the post shared by RWA Investor, this pattern is currently developing exactly as expected. The price action is beautifully respecting the boundaries of the wedge, and which means the market structure is clean and highly predictable. In my opinion, when I look at a mature falling wedge like this, right here, over here, I get incredibly excited. To me, this isn't just lines on the screen. It's a representation of market psychology. The weak hands have already jumped ship, and the aggressive sellers are running out of ammunition. So my personal take is that the accumulation phase is quietly finishing up, and the market is just waiting for a single spark to blow the top of this pattern. Now, the next question is, why is the 61.8% Fibonacci reversal level the ultimate battleground? The absolute core of this entire bullish thesis relies heavily on the golden ratio of trading, and that's the 61.8% Fibonacci retracement level. The analyst chart heavily highlights how XRP is interacting with this specific zone, which sits right around the $1.28 mark. If things gets a little bit more volatile, the broader support structure safely extends down toward 78.6% Fibonacci level near the price of $1.21. RWA Investor officially calls the 61.8 a bullish reversal setup. The chart shows that XRP's recent bounce from this exact golden neighborhood drastically strengthens the overall macro bullish narrative. Another popular trader on X named Lark Trades right here. Let's highlight this part. Again, Lark Trades. There you go. Lark Trades chimed into the conversation, agreeing that the falling wedge is beautifully respecting this exact Fibonacci level. So, in my opinion, the 61.8 Fibonacci levels has always been the golden line between a temporary pullback and full market collapse. The fact that the price bounced right here tells me that major buyers and institutional algorithms are stepping in exactly where they are supposed to. So my personal view is that this $1.28 area is an absolute fortress. As long as the buyers defend this floor, the path of least resistance is heavily skewed to the upside. Now, can a historic short squeeze force XRP past the key neckline? Here is where things get completely wild. RWA Investor explicitly states that once XRP breaks through the major neckline resistance zone between 1.50 and 1.60, a literal doubling of the price is on the horizon. The main fuel for this aggressive move isn't just normal buying pressure. It's the threat of a massive market-wide short squeeze. A short squeeze happens when traders who bet on the price going down are suddenly forced to buy back their positions at a loss when the price starts pumping. This forced buying creates a violent domino effect that aggressively rockets the price higher in a matter of hours. In my opinion, I absolutely love a good short squeeze narrative because it catches the bearish traders completely off guard. They get comfortable thinking the asset is stagnant, and then boom, the neckline breaks. So my personal belief is that there is a massive cluster of stop losses sitting right above the $1.60 level. The moment we cross that line, it's going to trigger an automated chain reaction of forced buying that will act like rocket fuel for our portfolios. Now, what are the long-term targets once the resistance breaks? Alright? If the short squeeze kicks in and the 1.50 to $1.60 neckline completely shatters, the analyst chart points to a beautiful, clear ladder of targets. The major milestone waiting for us above the breakout zone are mapped out at $1.91 right here, $2.40, $2.69, and $2.89, and ultimately topping out around $3.13. While the community is celebrating these targets, a market participant named Rise Trade took a slight more conservative approach on X. They reminded everyone that the actual price behavior and confirmation around the current zone matters a lot more than just staring at the target lines. They want to see real, decisive market confirmation before celebrating a breakout. In my opinion, I think it is always smart to keep a level head, but you cannot ignore the mathematical symmetry of these targets. Reaching $3.13 from the current structure represents a massive extension, but it aligns perfectly with previous historical breakout cycles. So my personal strategy here is to watch the volume. If we approach that $1.60 neckline with heavy trading volume, I will be fully confident that those higher dollar targets are going to fall one by one. And finally, when we look at the entire picture presented by the community on X today, the roadmap for XRP is incredibly clear. Everything comes down to one single condition. The market must decisively smash through the 1.50 to 1.60 resistance neckline right here. The structural foundation is already there. We have a solid falling wedge pattern, an incredibly strong bounce of the historic 61.8% Fibonacci support level at $1.28, and a massive crowd of short sellers who are overextended and vulnerable to a squeeze. Until that $1.60 neckline breaks, we must remain patient and watch the support levels hold. But the moment that door flies open, the technical structure suggests a rapid doubling of the asset is ready to catch the entire financial world by surprise. So we need to keep our eyes on the charts, monitor that golden Fibonacci floor, and remember to keep those hands diamond. And this finally ends our video. Thank you very much for watching, and see you on the next one, or you might as well just check this recommended video right here.